everyone. Today I would like to talk about what looks like a paradox, because on the one hand we see the credit fundamentals of companies that are deteriorating, and on the other hand we see investment grade booms continuing their rally. So investment grade bonds are benefiting from the central bank programs, on more expansionary budgetary policies, and also on the reopening of the economy. So we see it's not all about central banks, but it's a lot about central banks. New issues have started to boom at the end of March. Volume-wise and also price-wise, and they started as early as that is when the Fed announced its program. So what we see, what this results in is high valuation and high volumes. So maybe this is not what central banks would have preferred, but this is the price to pay for companies to be able to pile up cash and getting ready, knowing that there are still uncertainties. So in June, the pace in the US has slowed down in terms of new issues, but not in Europe. And all in all, on the first half of 2020, the amount of new issues has almost doubled compared to a normal year. And it's also, a lot of this trend is set by non-financial companies. Coming back to the central bank purchases, in the second quarter, there were 87 billion euros new issues in Europe, and the ECB has bought 40% of those. Whereas in the US, almost a double in terms of new issue, $167 billion new issues in Q2, and the Fed only bought 10% of this amount. The reason why is that when the Fed announced its program, it's got such a credibility that it has done almost all the job, explaining why the Fed needed less to buy. Also, even if the ECB has done more, bottom line, both central banks reached their targets, and it's very clear that investment grade bonds fully integrate the conviction that if market conditions deteriorate, central banks will be there. We can see that in the Q2 performances. Spread tightened, both in the US and in Europe, 90 basis points tightening in Europe, 122 in the US, which results on performances only in Q2, slightly above 5% for Europe and almost 9% for the US. So, on the one hand, what we see is that for companies, revenue drops, debt is rising. We also see rating agencies being very busy. We see also more bankruptcies. And on the other hand, investment grade bonds continue to rally further and further. So this could be called the paradox, but the explanation lies a lot in the central bank's interventions to explain this so-called paradox. Thank you.